morning. So this is our chart, and we shall try to finalize on it. This is our review. So on the delta frame, we observe that we already formed a swing, and since there was a formation of a swing, we were expectant that price will rally lower. We have this volume imbalance. This is a liquidity void. I'm anticipating that price will reach into this liquidity void either today, that is today's on Tuesday, or possibly on Wednesday. Yesterday price action, you see that the candle closed bullish, but it did not take out this third candle price swing, and it dropped low. And today we have started off moving low. I'm anticipating this to be taken and reach into this volume imbalance. Now going on the 4-hour time frame, we observe that on the 4-hour time frame, as price was rallying higher, we had this 4-hour CB, that is sell side imbalance, buy side inefficiency. There is inefficiency of buy side here, since there is only one way delivery of price, that is sell side was only offered to the downside, but there was no upside movement. And now price came, mitigated that CB, it rallied higher. If you look closely, I have put my levels here, and how far then could price reach above this 4-hour CB? You see that it reached into the -2 extension level, that is 226,110.2. That is how far I was expecting price to reach into, and you see it reached into it, which is aligning to the upper quadrant of this 4-hour week. Then later price reversed, and as you can observe is that price was respecting the 4-hour consequent encroachment. The bodies are not closing above it, it was closing just within the range and below it, and you can see this other candle rallied, took out this price swing, then it dropped low. So you can still observe there were signatures that were present that were indicating that price was ought to move low, and as you can see, price did not take out this high. Moving on to the 1-hour time frame. On the 1-hour time frame, I have put my delineators. I usually do it manually. From this is the midnight level, and this is the midnight level. This was Friday's price action, and now this is Monday's price action. We can observe on the Friday's price action, we had the previous day high here, which is this. This was the Friday's high, and this was Friday's low. We observe that price came, rallied higher, start of Monday, rallied higher, took out this swing high. Price took out this swing high. After taking out swing high, we see that we got an SMT divergence with US30. After getting that SMT divergence with US30, we see that price gravitated lower, came back to that 4-hour CB later, then it dropped low. Moving on to the 15-minute time frame. Remember that this blue shaded area is the 4-hour area. This is the 4-hour CB. Sorry, how did I highlight it? I highlighted it as 4-hour CB. It is the 4-hour CB. Now it is the 4-hour CB. On the 15-minute time frame, we see that price came here, lower quadrant, tapped into this 15-minute CB, rallied higher, had these down close candles, changing state of delivery, acted as bullish available. Then price rallied, closed above the 4-hour CB, then later dropped lower into the consequent encroachment of the 4-hour CB. Into the consequent encroachment of the 4-hour CB, we see that price, look at the bodies, nobody was violating the consequent encroachment. It was only wicking towards the consequent encroachment, and it rallied. And then another thing that it is of importance is that we got an SMT divergence with US500 that was indicative that there was a hand of smart money in this move. Price rallied higher into the -2 extension level, which is the dotted line here. You can observe that. Now moving on to the 5-minute time frame. Now this is the 5-minute time frame. We saw that here is the low. We got to SMT divergence with this 500. Then price was dropped lower, formed this low. Then this fair value gap ought to be used as an inversion, since it is the fair value gap that took out this sell-side liquidity, meaning that if price was bearish, this ought to have remained open, but since it was not bearish, then this had to turn its course to become an inversion fair value gap. Then after that, we see price expanded above this higher time frame PDR. When price rallies above, when price breaks away from higher time frame PDR, the fair value gap that forms is what we call a breakaway gap. Now this breakaway gap, we expect it not to be filled, and if it is filled, then it ought to give us an institutional order flow entry deal, and that is what happened. It gave us an institutional order flow entry deal. After that, it rallied higher. Look at this OB. Where did it form? It formed at the upper quadrant of this dealing range, this low, this high, and this low. That is where this OB, the down close candle, that is where it formed. So it formed at the upper quadrant. During the 2024 mentorship, ICT stated that we expect or we anticipate the quadrant levels to offer as entry levels, because we anticipate PDRs to form either at or below the quadrant levels, and we see from this area the OB was formed just at, and most of the bodies were below the upper quadrant level, so we were anticipating it to hold and price to rally higher, and that is what happened. Price held at the OB, tapped it, came to the opening price, moved lower a bit, and then rallied higher. Now this dealing range is what we'll use to measure how far price will go. And you can see this with this color purple, I believe it is purple. This is -0.25 extension level of what? Of this dealing range, this range high to this range low. We want to see how far can price reach. You see that it reached to -1, a -1 extension level of this range, and price started to accumulate a bit, then it reversed, coupled with the -2 extension level of the 4-hour CB. Now moving on to the next time frame where I took my entry, you see that price dropped into that higher time frame PDR. It came into this balanced price range. Why is it a balanced price range? Let us zoom a bit. This is a balanced price range because of this. Price offered sell side, then this level we got a one pass through onto this area. So this area here that I have labeled with white, I have put a rectangle that is in white, is a balanced price range. We ought not to expect price to come below this area, because this area has been efficiently delivered. There is efficiency delivery of price. So price started, reacted of it. I entered as price was trying to enter into this area, and as it was tapping the high of this candlestick, which is a bullish OB, enter there, and I took my profit at this negative 0.5 extender just above it. Let me show you here. I took just here, and that yielded a 1:2. So have a good time, have a good day. More reviews coming for the 9:30 open.